Okay, so this is an illustration. This is exercise 5.1 at the end of the chapter. And I'm going to show you how to do some adjusting entries. So starting with exercise 5.1, number 1, remember the key to adjusting entries is always look at the time period. And so notice this problem says determine the necessary end of June adjustment. So they want the adjustments as of June 30th. So starting with number 1, it says that the Brown Company paid $7,000 rent in advance for a 7-month period. The $7,000 was debited to prepaid rent. So what they would have done is they would have debited prepaid rent for $7,000 and they would have credited cash for $7,000. And of course that's on June 1st. So on June 30th, the question is how much of that rent has been used. And so because this is a 7-month rent lease, you simply take 7,000 and you divide it by 7 because that's going to be 7 months. So basically your monthly rent expense is going to be $1,000 per month. So the adjusting entry that you would make would be to debit rent expense and you'd credit the prepaid rent for, I'm sorry, that's $1,000. And let me just kind of circle this. So guys, that would be your adjusting entry for number 1. Number 2 says again on June 1st, they bought some supplies for $7,950. And so what they would have done, again, I'll just give you the initial entry, is they would have debited supplies for $7,950. They would have credited cash or accounts payable for $7,950. And again, that's June 1st. And then they say at the end of the month, they counted the supplies and it showed that there's $3,300 left. So if I kind of give you the T account idea, this is from your ledger. So let's say supplies said $7,950, that was the beginning balance, or that's what they would have bought. They're basically saying at the end of the month that the ledger should show a count of $3,300. So basically, the difference is what you used. And in this case, if you just subtract, that's going to be $4,650. So that's going to be your adjusting entry. So what you would do is you would book an adjusting entry for supplies expense. That's $4,650. You'd credit supplies for $4,650. I'll circle this. Guys, that would be your adjusting entry for number 2. Number 3 says June 1st, they bought some equipment, cost $64,800. So again, I'll give you the original entry. So equipment would be debited for $64,800. They would have credited cash for $64,800. And then they give you the life of this is 9 years with no salvage value. So under the straight line method, to get the amount of expense, you take $64,800, which is the cost. You subtract out 0 because that's the salvage value. And in this case, it's 9 years. So if you wanted to, you could also divide by the number of months. I'll do it by years. But if you did this for 9 years, remember, we only want 1 month. So if you did it that way, then you'd also have to then multiply this by a fraction of 1/12 because that's one month out of 12 months. So if you wanted to do it this way, that's fine. Or you could simply just take 64,800 minus 0 and basically take 9 times 12, convert the 9 years into 12 months, and of course that would also give you your adjustment. And in this case, it would bring it right at $600. Both of these would give you $600. So your adjusting entry would be to debit an account called depreciation expense for $600. And then the new account, if you go back and review the PowerPoint and also review the textbook, the new account that we are using is called accumulated depreciation. That's a contra account, contra asset account. That account would get credited for $600. That would be your adjusting entry. I'm going to circle it again. That would be your adjusting entry for number 3. Now, let's take a look at exercise 5.2. Same idea. You got a couple of them here. Again, follow the time period. This one, number 1, They said a firm purchased a 3-year insurance policy for $12,600. Notice that was on July 1st. And then they say the 12/6 was debited to prepaid insurance. They want to know the adjusting entry 1 month later at the end of the month. So again, you take that $12,600, and because it's a 3-year policy, what you could do is you could convert 3 years into months. So we know that's 36 months. And if you just did that, that would give you your per month. That would give you $350. And your adjusting entry, and this is insurance. So you would have insurance expense, debit for $350, and you'd credit the prepaid insurance for $350. That would be your adjusting entry for number 1. On number 2, this one's going to be for some advertising. Notice the date on December 1st. They signed a contract. It looks like it's a 2-year period. They paid $32,400. Okay, and they want the adjustment at the end of the month. They put everything into a prepaid advertising account. So again, because it's a 2-year period, again, you could just divide that by 24 months, and that would give you $1,350 per month. That's actually your adjustment. So you would have, in this case, we'll just use advertising expense for $1,350, and we'll credit the prepaid advertising for $1,350. That would be your adjusting entry on number 2. Okay, so this is exercise 5-3, and again, I'm not going to have you do a worksheet, but in case you come across it, this one, your adjusting entries is pretty easy. They already gave you the amounts, but in case you come across this and you're wondering what would the adjusting entry be, for Part A, it says supplies used were 5,000 or 5,700. Well, they had already, the balance in the ledger would show 9,000, but they're basically telling you this is what they used. So your adjusting entry would actually simply just be supplies expense debit 5,700, and you'd have to credit the supplies account for 5,700. So again, there's not a lot to do in this problem, but just want to make sure you recognize that is actually what the adjusting entry would look like for supplies. Same thing for insurance. It says insurance expired at 2,050, and of course the prepaid insurance account is at 8,200. They already give you the amount. So again, your adjusting entry would be to debit your insurance expense again for 2,050, and you'd credit the prepaid insurance for 2,050. That's really all you'd have to do on that one. And then of course the final one on the depreciation, they just go ahead and tell you it's 1,825, and so the actual adjusting entry would look like this. You'd have debit depreciation expense for 1,825, and you would credit the accumulated depreciation for 1,825. Okay, so I wanted to give you one more illustration on just the basic idea of adjusting entry. So on this one, I'm going to walk you through the basic idea of how you would calculate it. So again, for Part A, notice they want the data for December 31st, 2016, and the requirements say they want the adjusting entries again. That's our end date. So they tell you that at the beginning of the year, I'm going to draw a T account on this one. So you'd have supplies. It says at the beginning of the year you had $3,800. It said that throughout the year they had some purchases. Looks like it was $585 and $1,350. Okay, and then it says at the end of the year they had $3,445 left. So the basic idea of this, just to give you the visual, is they're telling you that the ending balance of supplies should be at $3,445. Now, the way you'd get there, obviously, is you'd have to get the total amount available. So what you need to do is you add the first three together, you get a total available, and then simply you take the difference between the available and what's left, and that's going to be what you used. And what you used is going to be your adjusting entry for your supplies expense. So again, here's another little approach. It's the same as what I showed you earlier, but sometimes you might have to deal with some purchases in between. Again, this is how you do a supplies adjustment. On Part B, again, you've seen this before. Prepaid insurance has $23,760. It's a 3-year policy. Notice the date is May 1st. So you could take $23,760, and if you wanted to, you can divide by 36 months. And then here's like where you have to start counting. So you got May through December 31st. And in my classes, I always say, okay, so start counting. So you know that if you do January, February, March, April, we know that's 4 months. The rest of the year, that has to be 8 months. So basically, just multiply that by 8 months, and that would be your adjusting entry. Again, the accounts would be the same that we used in the previous illustrations. You'd have insurance expense debit and then credit prepaid insurance. On C, here's your equipment adjustment. So it said you purchased it for $130,000. So that represents cost. The salvage value is $10,000. So the straight line method says you subtract the salvage value, cost minus salvage value, divided by the estimated life. So if you've got 10 years, we know that that's also 120 months, but because in this case our time period is January 1 through December 31st, which equals 1 year, this one's probably easiest. Just once you take 130 minus 10, just divide by 10 years, and that would be your adjusting entry for 1 year for your depreciation. And then of course on the last one you've got salaries. It says they're paid weekly on Fridays. It says, let's say assume December 31st falls on a Tuesday. So I always like to give you the time, like a picture of a map. So you got Monday, Tuesday, Wednesday, Thursday, Friday. So let's assume December 31st falls on a Tuesday. So if that's December 31st, there's our cutoff period. So what you need to do is first of all figure out your daily expense, assuming it's a 5-day work week. So you do 45,000 divided by 5. That gives you your basically expense per day. And the question is how many days are in the last week of the year? Well, there's going to be Monday and Tuesday. So then you just simply multiply that by 2 to get your accrual. And of course, let me give you the account on this one. You would basically be debiting salaries expense and crediting an account. You'll just put that into salaries payable. Okay, so again, just give you one more illustration of the basic idea of adjusting entries.